What if I told you guys today I've got this guy right here. He's follically challenged, but what if I told you he's here and he's going to be able to tell you things that you don't know, which is like a key going in a keyhole to make consistent profits through building additional dwelling units into your houses. And you're going to say, Rhys, oh, I've heard all this before, man. No, you haven't. So pay attention if you love profits through real estate investment. I'm Rhys Trenhaile from the Vanguard Team at Manor Realty. With me today is Scott Dillingham from LendCity. Thanks for joining us, buddy.
Yeah, thanks for having me, Rhys. Really appreciate it. Doug Ford government said, oh, yeah, everybody can have 3 units in Ontario, but a lot of the
That's right.
lenders are not up to speed with this, right? So we talked about it, and I'm excited to share with your crew.
Yeah, well, so last time I looked into it, I was bummed out because the answers I was getting was, yeah, these policies exist at the provincial and federal level, and there's no lenders working with these programs, right? So it's like, okay, well, that means our clients to do house plus ADU, they consistently need 120 to 150,000, do it all on to acquire a normal house that you can do it on, and then add one in the basement, right? But now, from talking to you, it sounds like that softened a little bit because and tell us more about this. And then, guys, we're going to get into these little nuances that will screw you up on this. And this is
Hmm.
why I don't know this stuff like Scott does. Scott, if I was doing a house plus ADU, Scott would be my guide on the financing side of this, right? And using the right people and the right tradespeople, et cetera, to maximize this. So we'll get into that in a sec. But the first things first, Scott, if you can explain to us sort of who's now lending, who's making this easier for us to make a profit on these conversions and these value add
Yeah,
projects.
absolutely. And just for those that are listening that are not aware of this, I mean, the existing way that everybody's doing it, and just in case you didn't know that you could do it this way, is if you have an existing property, right, and you've got equity, you can refinance your home and then use your cash to complete the ADU. So that's the method that everybody knows. But if you don't know that, right now you do. But there is two other lenders or pathways. So one is a conventional bank-like lender, and the other one is an alternative lender,
Sure.
which we use a lot with builders, actually. It's reasonable in pricing, but it's definitely a builder type of loans. With a traditional financing lender, you could be, because it's a special program, you could be looking at a lender fee of maybe 1% to activate this. However, they will look at your current value of your property and say the ADU is going to add 200,000 to the property. They will lend to you based on your future value, essentially giving you the money in progress draws to complete the ADU financing construction. Now, with regular banks, right, they're looking at your income, they're looking at everything, they want to see reserves, right? So if you don't have any savings or any lines of credit attached to your home where you have reserves to fund in between draws, then unfortunately, right, they won't move forward. You got to have some money to be able to work with a bank. So that's obviously the best and cheapest way. Generally, they do it as like an open loan while we're under construction, and then they convert it to a permanent loan at whatever rates are at that time. So great product. Then with the private lending, it's similar process with the progress draws, but now you're looking at fees from say 2 to 3%. Rates are
Yeah.
similar because it's an open loan, so no change there. But the beauty of the private lender doing the progress draws is they'll do unlimited draws where a traditional bank might do 3 or 4. So that capital reserve that I was talking about that you need with the banks, you don't really need it. Also, they're
Nice.
not really looking at income. Like they are in the sense they want to make sure they're going to get their money back for their loan, but they don't have a debt ratio requirement like the banks do. So if, the bank says, "Oh no, you can't afford this," right? We can still move forward, and then once your property is rented, right, it actually does make it more affordable because now you've got that extra income there. So that's the huge beautiful thing with the private loan, but obviously it does cost more money. So those are sort of the three pathways. But then, like you were saying, Rhys, the strategy here is all in the appraiser. I only know one appraiser locally in Windsor, Essex, who will actually value the full ADU value when you're doing this project. The other ones, they don't do it. They won't factor it in. So what happens is if your appraiser is not factoring in the correct amounts, then that's going to limit your ability to purchase and finance this. So really cool stuff.
So, Scott, why I love this in a broader sense is it's an example of how there's very, very few of us, especially in Southwestern Ontario, that actually focus. We eat, we sleep, we breathe this stuff all the time.
Hmm.
And if you're not working with Scott, guys, or you're not working with the Vanguard team, my 7 real estate sales commandos that focus 70% of their day on income properties, and Jason Balsden does all our house plus ADU stuff. Like, just that's what he does, right? And it's like, if you're not working with that, like, and we just had somebody the other day that chose to work with, like a cousin instead of, like, to generate the wealth, and it's like, I get that it's your third cousin, but if your ultimate goal is to make yourself wealthy through real estate investment, there, especially around here, there are not a lot of people that are going to get you to that promised land because they don't know how to do it. They don't know how to plan to generate millions of dollars in equity in a 5 to 7 year span. And then
Mm.
once you hit that sort of 2-3 million in equity in a 5 to 7 year span, then me and Scott can have a lot more fun building up your money into, the tens of millions. And if you're like, oh, well, that's crazy talk, it's like, no, like, I've been doing this 21 years. We have clients that got over 10 million, retired. One's driving around North America to Winnebago, unskilled line worker, like, not a PhD in astronomy, unskilled line worker, not even a trade. One of our other guys was a literal ditch digger, Lithuanian guy. He walked away with about $8 million. He's got a house on Elephant Lake now, wherever that is, up around Peterborough. Like, those are 2 examples. Like, I'm going on a bit of a tangent here, but guys, like, this sort of stuff, and then knowing which appraiser to go to, you go, oh, well, big deal. Yes, huge deal. Because the more you can use other people's money, the faster you can accelerate your wealth building through real estate investment without lifting any more fingers. Your effort doesn't go up, your bank account does. This is why I had to have Scott on today when Scott was telling us about this stuff. But sorry, I just went on a rant at the end there. Thanks a lot for joining us.
Yeah, no worries. Thanks for having me, Rhys.
Yeah,
Appreciate it.
guys, I will link Scott and LendCity into the description of this video. But yeah, we work together like peanut butter and jelly, our team and his team, and yeah, it's a great way to generate your wealth over time.
Thanks, Rhys.
Thanks for joining us, man.